And the Nifty Bank, the problem has been mentioning for the last many days is that 56,000 mark. We're crossing that, starting above that, but we cannot conquer that. So that becomes, one level that I'm looking at. Besides that, the other important cue that I'm looking at is the Nifty is down, right? The India VIX should be higher. That's not happened. A cooling VIX normally indicates that, in fact, not too much of a concern. And the fear index is not moving up. So that's why, in fact, as of now, at least I'm not too worried. The VIX has, in fact, cooled off by around 4.5%. Remember, today, I think you have the weekly expiry for the Sensex that plays out as well. So expect some action in the last 50 minutes or so. Post-con call, that one as well is flying away. And select names, from the defense pack, from the shipbuilders pack, well, they are still doing very, very well. Even the fertilizers name, maybe we'll touch upon that. So in short, not such a bad day, though the Nifty is down 150 points. We continue to remain in that.
Perhaps 100 points away from the lowest point of this recent trading range. But let's see how this goes. Also, keep in mind that US futures are lower. So while we're underperforming the Asian markets today, but Europe is slightly cautious right now. US futures are lower, and that's because of all these trade issues with the European Union now saying that, they're ready to levy countermeasures. One or two names, and that's, that's important to point out that even on a day like today, absolutely take his point. Look at Cochin Shipyard, look at Garden Reach Shipbuilders. These stocks are still up 4, 5, 6%. More names, something like an India Cement, something like a Sobha, 5%, Brainbees Solution, First Cry. That stock's up 12%. So at an individual stock level, Sami came out with pretty decent numbers. For this last hour, we have Mitesh joining in. Mitesh, good to have you on as always. What's the sense looking at the levels today and the action today? Index, Nifty and Bank Nifty, what's the advice? And what about stocks?
I think, I've been maintaining the range-bound outlook, and I said 24,500, 460 is the zone on the downside. We got a low of around 24,502. I think this broadly, is the area to take profits. I think this consolidation will continue. So on the index, I think, as I said, we are near the lower end of the range. Good risk-reward equation to enter on the long side. But I still don't have a signal that will break on the upside. Eventually, it looks like we'll still be in range for next few days. I've been trading with more of long bias. So I have a buy on Bank of Baroda right now. Keep a stop at 249.5. Look for target of around 260. The other one which I like, that's another banking, that's Maharashtra Bank, or Bank of Maharashtra rather. It also gave a good pullback. So buy it around 56, 55 half, keep a stop below 53 half, look for targets.
Your 3 o'clock call as well. Well, before we get to the next segment, just pull up a couple of names. Precision Camshaft, they come out with a set of numbers. And if you look at the numbers, they don't look very, very great. But it seems they've taken a one-time hit. And that's why if you look at it in the last 7-8 days or so, the stock has rallied close to 20% and currently 11%. From the lows, I think it's up close to around 15 to around 20%. Let's get in Ria, though, to tell us about fertilizer stocks. They're surging in trade. It's, the sector that we're looking at. Ria?
Well, yes, Nigel, fertilizer stocks have been trading higher in today's session, and this is because of agricultural products as well from Russia. Now, as per this bill, the tariffs for certain fertilizers will increase from the current 6.5% to almost an equivalent of 100% over the next 3 years, effectively halting trade by 2028. Now, this bill will enact duties starting in July, and this will continue over a period of next 3 years. And monsoon and the fact that the IMD has forecast for an above normal rainfall for the 2025 monsoon season, which will lead to some improved crop output, pickup in sowing activity, as well as increased demand for fertilizers and other agricultural products as well. On the back of this, we've seen fertilizer stocks gaining in trade today. Fertilizers.
Okay, all right, Ria. Thanks a lot for joining in and giving us a quick sneak peek into probable reasons why those stocks are buzzing around. Hemang Jani joins us on the show. Hi, Hemang. Monsoon's going to be good. Ria's telling us various other factors that are playing out. There are hopes as well that something comes in from the government. Those are hopes as of now. What's your take on the...
This is in action. Primarily, I think, a few reasons apart from what Riya said is that the inventory levels, within the fertilizer companies is down to almost, 75%. So there's a 25% drop in the inventory levels. Coupled with that, possibility of a slight increase in the fertilizer subsidy is what is, creating this buzz across the companies. And within the pack, what we like at this point of time is Bangalore Chemical. Remember, there was a merger of Bangalore Chemical with Paradigm. Paradigm being much larger company. So valuation-wise, it is good. The stock has run up in the past, let's say, 1 or 2 months. But even at this level, in terms of valuations, it is still looking compelling. Deepak Fertilizer is another stock that we like at this point of time, given its capacity and the product mix that they have. We think that it is better placed at this point.
Okay, Deepak Fertilizers, that's Hemang's pick. Got that, Hemang. Thanks very much for that one. And Ria, thank you for the analysis there as well. Hemang, hi, good afternoon. Great to have you on as always. These shipbuilder stocks are very confusing, I'm sure, for investors out there, right? I mean, you have such a good run and then you have some numbers. I remember Mazgaon stock was pretty weak. Then they came out with a conference call saying that Q4 was an aberration, things will pick up, etc. But, what's your sense? Given the run-up, is there adequate visibility on the earnings front as well over the next 1 year or so?
And shipbuilders, and to some extent, some other PSU, buckets also, you're seeing a little bit of action. They're typically high beta and they run up quite a lot. But when you look at the actual numbers, when you look at, detailed their balance sheets, the order book, the margin profile, it is not looking that encouraging to us, whether it is shipbuilders or even for that matter, some of the defense companies. Case in point being Bharat Dynamics, there was a lot of hype after India-Pakistan war and, the kind of money that could come in terms of upgrade, the fact that they have missile technology, but the margins actually dropped almost 50%. Even order book wise, things are not looking great. So while in terms of theme, in terms of momentum, in terms of headlines, the space may look good, but pure fundamentals, the growth, the margins, I'm not too convinced by it. So staying away from it purely from an investment perspective.
Okay, all right. So cautious on some of these defense plays and staying away from them. Got that. Hemang, we have to ask you about your sense on all these block trades, right? Blocks are a rage in this season, and there were several that happened today as well. I think at least 4 blocks. We've got Nimesh joining in. Let's get a quick wrap-up going with him, and then I'll come back to you on the recent deals. Nimesh, over to you. What a busy day for blocks again.
But I'll start with Yes Bank, biggest F&O loser today. Remember, the stock rallied 8% yesterday, and today it's down 6%, 7% on the back of the large block. So 3% equity got changed hands at a discount, and hence the stock is under pressure. My sense is one of the large private equity investor was a seller in today's block deal. If you look at the scheduling pattern, there are 2 large private equity investors. Carlyle owns close to 6.8%, and Advent owns nearly 10%. One of the large PE was a seller in today's block deal. My sense is Carlyle has sold half of its stake. In fact, the sense I picked up was maybe there could be a clean out from Carlyle, which is 6.8% stake. So need to see whether there are more blocks. But in the morning block, 3% equity has changed hands at a lower price. Hence, that stock is under pressure today. The second stock is Ola, which is also under pressure on the back of a large block. Even in Ola, close to a little over 3% equity has got changed hands at a discount. And in Ola, my sense is that Hyundai, either directly Hyundai or Kia, they were the sellers in today's block deal. Hyundai owns little over 2.5%, and I guess there is some holding via Kia as well. So, but as far as Ola is concerned, the feedback is that most likely Hyundai and the group entity has sold a stake in Ola Electric today. So these were the 2 large blocks. Apart from that, Aptus, we all knew that there was a book launch, so there was a large block expected. Vesbis has sold clearly 9.5% stake in Aptus. And also there was a big block in Zinca as well, where one of the strategic investors sold out. But 2 blocks which are important. One is Ola, where Hyundai is a likely seller. And in Yes Bank, my sense is private equity investor was a likely seller.
Okay, all right. Nimesh, got that. Thank you very much. It's a busy day for all those blocks once again. Hemang, what's your sense? I don't know. Ola has just been a great wealth destroyer. So I'm not sure if you have any word of advice on this one. And the other more interesting name, frankly, is Yes Bank. With the change in ownership now, anticipated with the Japanese conglomerate coming through. What's your call on this stock?
So no specific call on Yes Bank. Yes, I do feel that if you have a new investor coming in, it would surely have some sort of a base, being formed, and you might see a few percentage points, up and down. But no real great growth visibility. And though there has been a lot of hope and expectations, I think somehow the numbers are not showing up, and the valuation is still not looking that good to us. So we would surely stay away from it. Within the blocks which have happened, by the way, should be almost about 75,000 to 1 lakh crore has been mopped up. what we liked was Indigo, because that is where we think that, in the current scenario, things are extremely well placed. Stock did not correct much, but even if they have some issue in terms of code sharing arrangement with Turkish Airlines, they've already lined up with few other players. So that is something that we like at this point of time, and we think that this will be one of the best performing stocks in terms of Nifty earnings and even the stock.
Okay, all right. Got that, Hemang. Well, let's focus on the precious metal space, and then let's focus on a stock. The reason I say this is because silver prices, they have surged to a near 2-month high globally, while in India, I checked that the silver price has breached the 1 lakh per kg mark. What are the key drivers? Well, the key drivers for the price increase are basically trade tensions, which have raised demand. And also there is some safe haven buying as well, normally when there are trade tensions that come about. In addition to that, you have a weaker US dollar that's made silver look relatively more attractive, particularly for international buyers. Now, the silver market on the whole, with regard to demand, it remains buoyant because of industrial demand coming from various sectors, renewables, automotive, electronics, 5G as well. Now, Hindustan Zinc is the only listed way to play the silver price jump in India. And it's among the top 5 global silver producers. Remember, a decade or so ago, it was in 23rd position. So now it's in the top 5. Hindustan Zinc silver production, well, in the past year, if you just look at that chart, it had slumped in FY25. But they've guided for a recovery in volumes. For FY26, they're talking about 700 to around 710 tons in FY26. In terms of an EBIT contribution, well, it shows that the precious metals, which is predominantly silver, that contributes close to around 38% of the total EBIT mix. The management as well has indicated that a 10% rise in the commodity prices could lift the EBITDA by around 550 to around 575 crore rupees annually. Keep in mind, the average of silver for the last year was roughly around $30 an ounce. So at around $34.50 per ounce, well, it could spell better times for the company going ahead. So Hindustan Zinc is a stock that's actually outperforming its metal peers because that's the only way you can play silver price spike. Hemang, what's your view? Hindustan Zinc is a stock in focus, but I'll tell you what, majority of the trading community, they would rather play it via Vedanta because there's higher liquidity out there. And Vedanta owns Hindustan Zinc. And you have a special situation that's playing as well out there. Your take?
Nigel, you have a very nice detailed understanding of that. And if one really wants to play the silver price, momentum that we are seeing right now, I think Hindustan Zinc would surely be a better play because a large part of their EBITDA earnings is related to the silver pricing. And as we all know that, given the current supply demand dynamics, pricing could remain a much better. So I would certainly go with Hindustan Zinc, not with Vedanta, because that adds to the complexity in terms of holding companies, so on and so forth. And to add to your point, Hindustan Zinc recently reported a very steady set of numbers, almost about 4,800 crore of operating profit, about 8 to 9% kind of a growth. Overall capacity wise and, overall growth outlook wise, the company looks better placed. So I would certainly go with Hindustan Zinc.
Okay, got it. All right, Hemang, got that. Hemang, I wanted to ask you, any view on Reliance Infra? The stock this morning, when we started our market, was down close to around 5%. It's been seeing massive delivery-based buying. And it seems, that today as well, from the lows of the day, it's popped up. Any view on that stock? Would you, have you looked at it fundamentally? Interest costs have come down. They've got an upgrade as well. They're talking about big defense potential. But did you have a closer look?
Potential and other things. I've been hearing about it for a while. The stock actually corrected quite a lot to 220 or thereabouts, and from there it has really bounced back. But honestly, I'm not able to see any great fundamental story around it, in terms of numbers, in terms of, what could possibly drive the thing. In fact, last March quarterly number, there was hardly any operating profit per se. So, not getting into this one.
Do you have a view on the pipe makers? The one I want to ask you about is Welspun Corp. We had Mr. Mathur of the company who joined us earlier today. And he's saying that there are very good signs for the US business, because their EBITDA last year was around 1,800 crores. They're already talking about 2,200 crores. And the visibility that they have with the capex that they're doing both in Saudi as well as in the United States, that holds them in good stead. Saudi is a strategic location. US, it seems, that's a solid margin business. Any view on this company? In the last few days, the stock has rallied, I think, close to 20%. Today, it's cooling off a little bit. But view on it?
Still, within the pack, like Astral, I think that company seems to have started doing pretty well. And there was some MSCI selling 2 days back. So now I think the selling pressure, which was anticipated, is also almost over. The numbers were reasonably okay, but more importantly, the guidance that the company has given out for this year is very good at about 14-15% kind of a growth. So we'll be more comfortable with something like Astral at this point.
Astral. Okay. Got it. So that's a particular pick. Hemang, your thoughts on the auto space? I mean, we've got all the sales numbers. We've seen all the trends come through. Obviously, the usual suspects are there. M&M, TVS, they've been doing well. iShares numbers have been, getting better and better over the past couple of months. What would your top picks be, whether it's two-wheelers or four-wheelers?
So this monthly numbers, nothing really, that stood out in terms of growth or surprise as such. But I do think that if you have a rate cut, which people are now saying that almost it would be about 50 basis points, then that could create a little bit of excitement for the auto companies, So it would be more comfortable buying into something like Hero Motors, or to some extent, I think Maruti numbers were not great, but I think on the export front, what they have delivered is looking quite encouraging to us. So some of these auto companies surely would stand out, and these are the preferred picks for us for better monsoon, for rate cut both.
Okay, all right, Hemang, thanks a lot for joining in and giving us your view on all of those stocks as we speak. Well, for the markets, not too much happening. From the broader markets, though, a couple of stocks actually that have moved up. Brain-B Solution, that stock is doing very, very well. It's up close to 13%, so massive move is what we're seeing out there. And the PSU banking names actually in the last few days, they've relatively been outperforming what the private banks have been doing. Even today, PNB in the last few minutes, that stock has spiked up as we speak. So just pull up PNB as a stock. That's currently moved to the high point of the day. Well, time to slip into a short break. But on the other side, we'll discuss the fund flow trends, valuations as well. Peter from BofA Securities will be joining in on the other side. Well, as promised, let's go across to Peter Guntart, who is the head of Asia Pacific Global Corporate and Investment Banking at BofA Securities. Hi, Peter. Thanks a lot for joining in. And remember, Peter's joining from the sidelines of the BofA Securities 2025 India Conference. Peter, it's been a while since we spoke. Thanks a lot for joining in. Well, let's focus on a couple of aspects then. If you look at the corporate banking views from Asia Pac, the big trend that we're seeing in India is monetization by private investors as well as promoters. Is this an India-specific trend, or do you see this across Asia Pac?
No, look, we see the trend across Asia Pac, although I would say that, India, obviously, given how strong the market have performed over the last 3 years, which has been the best performing market in the world, it's normal for private equity who has been investing over a long period of time in India to monetize some of their earlier investments. But I would like to stress that, if you look at it from a net flow perspective, all the private equity firms continue to, put more money at work in India than they're monetizing. I think for the promoters it's slightly different. Obviously, a lot of them again have been have been holding positions for a very long period of time. So again, some of them, for idiosyncratic reasons, maybe is change in situation, or also the fact that there's a generational change, are looking to take advantage of the very strong market.
All right. Peter, great to have you on the show. Thanks so much for joining in. The other big trend that has been noticed quite a bit here in India, that in these recent block trades, MNCs have been looking to pare down their stakes. And this has happened perhaps from a valuation point of view because they feel that, valuations in India are rich. But you tell us, what do you think the trend is going to be here onwards? Will we keep seeing more sales from MNC promoters as well?
I do think that this trend is likely to continue for two reasons. I think, first of all, the Indian government is encouraging successful multinationals, to list their subsidiaries, so that investors have the ability to invest directly, in the Indian part of the business. And if you're a multinational and say, you're trading at 10, 12 times earnings, as an overall business globally, and your Indian subsidiary trades at 25, 30, sometimes 40 times earnings, from a poor corporate finance perspective, it does make sense, to monetize. Having said that, I think, overall, multinationals remain extremely bullish about the opportunity in India, and and most of the money that they're raising, is also, or a lot of that is also reinvested in further growth, as everyone thinks that the next decade or more is really, is where India is going to outperform, its global market significantly.
Well, Peter, the other big trend that's been the listing of MNCs in India. We saw Hyundai last year. Is it going to be a big trend that we're going to see a lot of supply of MNC paper here in the Indian markets?
Absolutely. I think especially, companies that have a consumer brand, it makes a lot of sense. So any business that is B2C, I think, and has scale in India, is definitely going to look to list, and and I think that's a trend that we see for many, many years to come. So yeah, absolutely, we're working on a number of them, and we believe that this trend is going to here to stay.
Peter, if we can ask you about M&A trends across India and as well as the region, that's the Asia-Pac region. We haven't heard of any large deals in the last couple of quarters as far as outgoing deals are concerned, outbound M&A. The last one perhaps was Adani's buying out Holcim. So what's your take on both inbound as well as outbound deals around India and the region?
Sure. Look, I mean, the M&A market, has been slightly slower at the beginning of the year globally than what we would have expected. Because some of that is driven by macroeconomics, by uncertainty. If you're a board and you're making a big decision about selling an asset or buying an asset, and you do not know, what, for example, the tariff situation is, that's, a very tricky decision to make. Having said that, we do believe that, we're going to continue to see, significant M&A activity. Again, if you look at a multinational, if you don't have scale in India, you may be looking to sell. It's also, I think, there's going to be a lot of assets coming out of private equity, which may be interesting, for people to buy. So we believe that, in multiple sectors, we're going to continue to see a very robust M&A market, and the dialogue, is definitely very high.
All right, Peter, taking your point forward on the MNCs who don't have large operation and are looking to exit, is that trend going to be seen in something like, say, the cement sector?
Look, I do think that when it comes to to some of these sectors like cement, we obviously had holds him selling. I think there's question around like what would someone like Heidelberg do? Because I think there's also because you look at like in the energy space, because where a lot of private equity firms have built up large renewable platforms, which could be interesting, which could be interesting investments. So there are clearly these sectors where also I think multinationals have realized that it's pretty hard to compete with the most successful Indian companies in these sectors, and they require continuous investment where it may be the right time for them to monetize.
All right, take that point. Got it. Peter, do you have any insights on private equity exits and investments? When a lot of PEs checked into Signify, I mean, what does that tell us about the PE stance on India?
Absolutely. So look, the business model of private equity, is to recycle capital. They invest, they normally maybe hold for 3 to 5 years, and then they return capital to their investors. That's very important, because private equity really works around funds, globally is that investors into private equity, they want to see money returned from their previous investments, as they invest into new funds. The allocation. First of all, the funds that private equity is raising is getting bigger and bigger, and the allocation of the Asia funds, of the private equity firms towards India over the last 5 years has gone maybe from 15 to 20% to more. That now, if I look at it on a net basis, then the private equity investments in India are only going up at the moment, despite the fact that it may look like from the public market, is that actually, as private equity is monetizing some of their existing holdings in India.
Peter, give us a word on the M&A trends across Asia Pac as well as the globe. Which are the sectors you believe that will still see a lot of M&A transactions happen?
All sectors. We see a lot of activity in Asia. We see a lot of activity from Japan. With the corporate governance reforms. Also, Japan into the US, Japan, is obviously a massive investor, in India as well. So that's clearly a trend that we see. And consolidation, happens really in every single sector. As companies are getting, it's definitely something that works well. You spoke about data centers. Look, it's obviously, it's one of the big buzzwords for the last, year and a half, has been around, general AI. I think it's hard to predict trends and say, what's going to be the next killer app here or there. But one thing that is in common is that the world is continuing to consume more data, which means more data storage.
All right, understood that point. Peter, the other big space where there are deals happening globally are, for example, the oil and gas segments. Are you expecting to see a lot of transactions here, specifically in oil and gas energy overall?
Look, I think the energy space, is definitely, another area where we believe we're going to continue to see their portfolios, look at what they're going to do next, So this whole area of, of portfolio optimization, will continue. The same is true, actually, by the way, for pharma, because we've seen, a lot of licensing deals in the pharma space happening, for example, between China and the US. So, I think both pharma and energy are areas where we expect continued activity, in this year.
Peter, before we let you go, you have been tracking the Asia Pac for a very, very long time. Well, in the last few years, is there any distinctive trend that you've observed in India, which you think is going to be, say, a mega trend going forward?
Look, I'm very bullish and continue to be bullish. And I remember, as I did a similar interview a year ago, and I said, India will continue to be one of the best performing markets. I think the mega trends, continue, to work well, for India. And, and I think the amount of new companies that we have seen coming and coming to the market, and the innovation that these companies are bringing and the scale, that is something that continues to excite investors in an environment which the geopolitics are hard to predict, but it looks like India is going to continue to be a winner.
All right, on that optimistic note, we'll wind up the conversation. Peter, pleasure having you on our show today, and we look forward to perhaps connecting more often in the future. Thanks so much for joining in. We'll take a quick break, and as always, we come back on the other side, check on all the dealing room, buzz and chatter, and then, of course, final trading calls coming up with Mitesh as well.
Welcome back. Well, market's slipping a little bit, as we speak. The Nifty actually is moving back towards the lower end of the range. The Nifty Bank, though, still holding at around 55,600 odd. Mitesh Thakkar is back with us. Mitesh, a quick word on the Nifty with today's price action. Do you think there's a trend reversal, or would you continue to remain bullish? And also, if you could give us your buy or sell call.
I think I'm not bullish. I'm just saying that the markets is consolidating. The entire rally, if you see, what started from sub 22,000 levels, made a high of around 25,150, and on an intraday basis, 25,050 on a closing basis. I think that's the upper end of the range, and you have a gap support as well as some kind of support around the 24,500, 450 zone. So I think we might just see this consolidation continue for a few more days to come by. Till the base building at the upper end happens, and then we can look at possibly a continuation. So my bias is on the positive side, though I think in consolidation we might test the range lower end multiple times, even break it mildly. So we'll go through that. So not trading the index per se, but I don't have a bearish or a bullish outlook. In the short term, I'm kind of maintaining a sideways outlook. And on the stock side, BTST on Dabur, keep a stop at about 482, look for a target of around 494, 495. And one STVT that's on Eicher Motors with a stop at about levels of 53.71 for targets of around 53.20.
All right, got that. Mitesh, thanks very much for all the trading advice and the calls, and we'll see you again tomorrow morning. For the timing, it is time for D Street Chatter. And the chatter is coming in from all the investor conferences that are happening across the city of Mumbai. We have Nimesh joining. I think he's hopped across to the Morgan Stanley conference this time around. Nimesh, busy so far this week, right? So what's the latest? What's the buzz you're picking up?
Absolutely, Surabhi. Morning it was BofA, and now I'm back to Morgan Stanley. So it's all over the place, I can say. I've been meeting a lot of investors as well. So it's good to catch up with them and get a kind of ground reality or a ground check from a lot of these investors. But having said that, coming back to the markets for today, I guess it's a bit of a consolidation with a negative bias. But again, the feedback is the flows are not very negative. There is no very large selling, is what I understand from larger FI, larger institutions. But do remember, because of the four large blocks, the institutional data will again look a bit skewed today. So we'll have to account for those four large blocks, which I think was more than cumulative, which is more than around 5,000 crores. So that's something to track in today's institutional data. I guess the big trigger to watch for India market would be the RBI policy later this week. Already, there are a lot of indications that suggest that maybe there is a chance of a 50 basis points rate cut, and you've seen a bit of that getting priced into the financial stocks as well. But still, the feedback is that you'll see a bit of a rally in the bank stocks, and especially the PSU bank names, if indeed that has to be the case on the RBI policy later this week. And I've been saying for a while now that on a consistently basis, there is a bit of buying interest back across the PSU basket. And in the last few days, it's largely tilted towards the PSU bank stocks. So that trend largely continues, is what I understand, even in today's market. So net, a consolidation day, but the flows are not very largely negative, is my sense.
All right, Nimesh, but, at the conference, good to get feedback. But what the viewers want to know is what's the vibe with regard to individual stocks? So what are you picking up buzz on that front?
So, Nigel, the big dominating theme of late has been large blocks, right? We saw 4 large blocks getting executed today, and that trend is likely to continue. I'm getting a sense of few large block deals very soon, which includes the names like Suzlon. But again, for Suzlon, it could be an OFS as well, where the promoter entity could be a seller. So that's something to track in Suzlon. Alchem Labs and Indegene are the other few names where the sense I'm picking up that there could be large block deals very soon. So these are the few names to track from a flow perspective or from a supply perspective. The second couple of stocks, and this is the capital market theme which is getting played out of late, KFin as well as CAMS. Even after the recent run-up, there is a buying interest in CAMS, and there is a good of delivery-based buying in KFin Tech as well in today's market. So that's something to track. The third stock is Kaynes Technologies. Again, that's been buzzing in the last couple of days. In fact, last week, the management met some large investors as well at one of the conferences. But again, the indication is that Kaynes is likely to raise funds via QIP very soon. So that's the trigger there. And the last one is Paytm. For second day running, the stock has been buzzing. There has been buying interest as well from large institutions. And of course, the big question is by when you could see a MDR relief. So that's again, which has been a strong buzz. But there is buying as well in Paytm from large institutions today.
All right. Okay. Plenty of buzz and perhaps more blocks coming ahead. Got that, Nivesh. Thanks very much for the update. Let's put the spotlight on some more individual stocks that are in focus. Sources are telling CNBC-TV18 that Sun Pharma is under the US FDA's regulatory lens. It appears that US FDA's inspectors are currently inspecting the company's Halol facility, which is, of course, a pretty important plant for Sun. We have Vivek joining in with more. Vivek, this is an important story. What are you picking up?
Well, that's right. It's a very important development to track as far as Sun Pharma is concerned. What we understand from our sources is that, like you mentioned, there is a US FDA inspection currently underway as far as Sun Pharma is concerned. This is a sudden, unannounced surprise inspection from the US FDA for Sun's Halol facility. We understand the 3 inspectors actually entered the premises today morning to conduct, and this will be an ongoing inspection. Generally, could go on for 5 days. In certain cases, extends even longer. Now, as far as Halol facility itself is concerned, the current regulatory status is that it is under an import alert. The last inspection was in May 2022, post which there was a warning letter, and after which the facility was given an import alert status, indicating that no new approvals are forthcoming from this particular facility from the US FDA. However, analysts have consistently been going ahead and asking the company as far as, what are the extent of the remediation measures that have been undertaken as far as Halol is concerned. So if you look at Q4 FY25, the company said remediation is complete, and in fact, they had requested the US FDA to come and inspect the facility, and in fact, they also mentioned that it's likely to be a surprise inspection. As far as Halol is concerned, it's one of the company's largest facilities, like we mentioned. Multiple dosage forms such as injectables, ophthalmics, as well as hormones are manufactured here. The importance of Halol has been steadily decreasing, given the fact that this particular facility has constantly been under the regulatory scanner. FY 2022, 3% of consolidated sales came in from this particular facility, but it's an important facility nevertheless, given the kind of filings that could be from here. Sun Pharma right now has a patchy record with the US FDA, given the fact that Dadra, Mohali, as well as Halol, all of them are under the regulatory lens.
Okay, all right, Vivek. Thanks a lot for that. Well, let's focus on Vodafone Idea then, because AGR relief is unlikely for them. Rima joins us to fill us in with more details on that front. Rima?
Indeed. So Vodafone Idea is back in the news. This is after the Communications Minister, Jyotiraditya Scindia, told Times of India that the Indian government will not provide further relief to the telecom companies following Supreme Court's rejection of their plea. This is something CNBC-TV18's Ashmit has also been reporting. He also went on to say that's the telecom minister, that the government will not convert any more equity in the company beyond the existing 49% stake. Now, brokerages, in terms of a verdict, it's still a mixed bag, because there are some brokerages who hold out that or still believe that relief in some form might be coming. So Ambit says we remain buyers on hopes of a supportive government stance, but investors who are looking for risk upside exposure, means adjusted lower risk upside exposure, should look at Bharti or Indus Stars. IFL has a reduced call, target price 4. Citi and CLSA both are bullish. Citi has a buy call, though they lower the target price to 10 rupees, while CLSA 8 rupee target price with an outperform rating.
Okay, all right, got it. Thanks very much for that. So Vodafone Idea continues to be in focus, and we need to see what the next developments are. Let's actually get back to some more stocks that are in focus, and Swiggy is one that we're looking at. A couple of brokerages have come out with favorable notes on Swiggy. Stock's not doing much, about 1% higher, but let's go across to Manglam to figure out what the interpretation and the call is. Manglam, I think this was a Morgan Stanley call on Swiggy, right?
That's correct. So Morgan Stanley has actually gone ahead and initiated their coverage on Swiggy with an overweight rating. They have a target price of 405 rupees, though the stock has come off the highs of this morning. So the thing is that they have 3 basic theses for Swiggy. The first part is they're saying that the business is narrowing its margin differential with Eternal Zomato. So that's a positive. Secondly, the street has factored in all the upfront investments that they are making in quick commerce, but perhaps the street hasn't factored in yet the kind of increase, total addressable market and the impact of that on their revenue for the quick commerce business as well. So those are a couple of factors that they like in Swiggy. So what they believe is that going forward, the margin difference between Eternal and Swiggy for the food delivery business will narrow, because that business is actually doing fairly steadily. For Swiggy, they'll hold on to their market share as well. And they've revised the total addressable market for quick commerce, and they now peg it at close to around $57 billion. And they believe that if Swiggy continues to hold its market share out here by 2030, they will make a fair amount of money as well. They believe that it will be contribution margin positive over the next 6 quarters and soon EBITDA margin positive as well on an adjusted basis. So they valued this business, quick commerce business, at a near 20% discount to that of Blinkit, and they valued the food delivery business at a 5% discount to Zomato, and that brings them to the target price of 405, though the stock is off the highs.
Okay, all right, got it. Thanks very much for that. Neat summary of why Morgan Stanley is quite upbeat on some of these food delivery and quick commerce plays. Thanks for that. Well, we have Jay Bala of Cash the Chaos joining in on this leg of the show. Jay, always great to have you on. Thank you for joining in. Range, just a range on the market. I think now it's 14 trading sessions, if I remember my count correctly, that the Nifty has been in a, roughly speaking, we're talking about a 500, 550 point kind of a band. What are you seeing? I mean, what sense do you have looking at the overall setup?
Hi, Sylvie. Good to be here. I've been anticipating the market to pull back lower in a stair-step fashion, and the markets are doing exactly that. And happy that the decline has been slow and labored. That's a sign of a bullish consolidation for the markets. The Nifty supports come at about 24,300 to 23,825. So it's quite nearby. So possibly we could see another session of decline, and then the market starts to resume its uptrend. That'll be a sign. If we have one more session of decline, the market starts to perk up. That'll be another sign that the markets are behaving as expected. The Back Nifty, though, today's session is a weak session. If it were to see a follow through, I think it can pull back somewhere close to 53,400 to 52,900. Again, I mean, in my books, that'll still be bullish consolidations for the overall market.
Okay, all right. Hi, Jay. Good to see you in as always. Jay, I think last week, if I remember correctly, Schneider Electric was the stock that you spoke about. And I think that one just perked up in trade. So first, revise the view on Schneider Electric. And I believe you have a few more interesting names for us. Purankara, Lloyd Metals as well. What levels are you seeking out there?
That's right, Nigel. First, Schneider Electric, I'm anticipating it to go back to all-time highs close to thousands. So the stop loss that we maintained at 540 when we identified this call, that can be upgraded to somewhere close to 600. And when it comes to the new picks, Purankara is a conditional buy, not a straightaway, it's a bullish setup. I want the stock to cross 268. If you recall, we had discussed last week that I said that real estate stocks are likely to show some signs of action in the form of rotation. And that's exactly what is happening. Not only just Purankara, names like Omax, Shobha Developers, and Brigade, they have been doing positive developments for the last 2 sessions. So that's positive in the real estate space. So as I said, it might have a knock-on effect on other sectors like cements and banks. So watch out for Ultratech. Ultratech, if it were to come close to 11,000, I think that'll be a sort of a bottom. It's still correcting. We want to hold somewhere around the 11,000 ballpark and then reverse. That'll be positive. And Lloyd's Metals and Energy, I'm positive on that, but the risk rewards are not favorable. But if you're already in a position, maintain trailing stops and it's bullish. Anantaraj is another name that I like within the real estate space. But it's slightly late to get in here, but trailing stops of 500. And if you want to enter fresh positions at about 500 as a stop, it's up to your risk reward potential. But it's not an ideal risk reward for me. But the stock is quite bullish.
Okay, all right, got that sense. Jay, what are you now seeing? By the way, the pressure on the market is telling now. It's 180 points lower. That's what we have. The mid-cap index is also down about 0.5%. And remember, this is now, we need to see if the US market can shrug off. I mean, yesterday was a day when the market shrugged off this whole issue of tariffs and, 50% on steel and aluminum, because the war of words is continuing, not just between China and the US, also between EU and the US right now. And US futures themselves are lower. I was just coming to that question, Jay. I mean, what are you reading when you're looking at, say, the dollar bond yields, the US market setup? What does the sense tell you?
Yeah, the US market setup is quite interesting, Surbi. The S&P had its best May gains, May month gains since 1980s. So 1990s actually. Whenever the May month has clocked a gain of over 5%, the S&P has gone on to give positive returns 12 months rolling forward. All 6 other instances have been positive returns, so this might happen to be the 7th instance. And the lowest gains has been about 8% 12 months forward, and the highest has been about 30% 12 months forward. So that's a very interesting condition the markets have. This is not fatalistic. We need to follow the trend, but it's a good condition to have. When it comes to the dollar index, we're seeing some side of the pressure mellowing down. So I'm anticipating some counter-trend bounce to come through for the dollar index somewhere close to 103 to 104. And this naturally leads to the precious metals gold. Gold has been having the worst month since 1990s in June. So an average loss of about 0.5%, but it tends to have the worst decline during the month of June. So that's risk-on positive for equity markets too. So when it comes to yields, the 10-year yields are locked in a range. Above 466, I'm bullish on the yields. Below 410, I'm bearish on the yields. So right now, it's sort of middling. So watch for this range to break out. Once one of these boundaries gets broken out, we can have a clear direction on the US 10-year yields.
Okay.
Okay, all right. Jay, I wanted to ask you about another asset class. What about the Bitcoin? At around when it went to 75,000, people are calling for lower levels. Surprised everyone, went to 110,000. At current reckoning, what do you think? It'll pull back a little bit more?
That's right. Bitcoin is a signal of risk on, risk off. And now we've got fresh record highs. That's another indication that we need to be bullish on equity markets. The current pullback could take Bitcoin somewhere close to 103,000 to 95,000. So that's my reckoning for the moment, and anticipating higher highs to come through. But that will be a final high somewhere close to 125K to 144K. That's the short-term objective I'm working with. First, a drop slightly below 100,000, then a recover to fresh record highs.
Okay, all right, got that. So you're saying another indicator that equity markets are probably headed higher. That's the way risk assets are shaping up. Got it. Jay, stay on. We'll come back to you for some more questions on the local market here. But let's play out some opinion that we picked up from Jonathan Garner, Chief Asia and Emerging Market Equity Strategist, Morgan Stanley. We'll take this break, hear out Jonathan Garner's view. We'll come back in just a bit with some final questions with Jay Bala.
Well, we're very bullish on India. It's our largest overweight. And if you just look at the most recent quarter, 7.4% GDP growth, I mean, that is far and away the strongest of the major economies in the world. Volatility on the Indian equity market is much reduced now, which again affects the risk premium as foreigners would see it. It's trading less than half the volatility, for example, of a major Asian index like the Hang Seng Index, when you look at, let's say, Sensex or the Nifty. The weight in the EM index is constantly rising. It's the second largest market in the index now. And so what we're seeing is like passive allocations are building towards India, but also for the first time, non-EM dedicated investors who tend to maybe have more of a growth style bias are starting to get involved in India. I think the last sort of 18 to 24 months is starting to change, absolutely. You look at, say, FDI flows or private equity flows into India, they are very, very buoyant, and they come from, across the planet. They're not just coming from the United States. So I think this perception that we have is actually shared by many investors as they commit long-term capital. Yes. And we would still anticipate that India would be one of the first countries where there will be at least an outline deal done. Not lower than 10%. I mean, this is part of industrial policy in the United States, and it also raises tax revenue. So it has those two planks that underpin the philosophy here. We think for most countries, it's going to be sort of lower than where we obviously got at the peak of the post, like, Independence Day announcements. But for China, it'll probably be materially higher than for the average country. So this hegemonic rivalry between the US and China will result in higher tariffs that both will have on each other by the end of the year.
Welcome back. Well, we are in the last leg of the day's action, and the story is that it's probably going to be ending as a down day, about 0.7% lower on the Nifty, and for a change today, even the mid-cap index is on the downside. Let me ask you about some of the defense names like shipbuilders, etc., Jay, because you have an overall positive view on the market, and this has been the part of the market that has the maximum momentum. Though the fundamental news flow earnings, that could be patchy. What's your advice on stocks like Garden Reach, Cochin, Mazagon? What to do here?
Yeah, it's still bullish here, and I was earlier not bullish on Cochin Shipyard, and but it's quite late when it comes to stocks like Garden Reach and Mazagon. I've been bullish on it since November. I anticipated it to bottom, and it did bottom around those anticipated levels. But Cochin Shipyard might have a little more steam. It's if it were to clock another higher high, I think it's likely to retest its all-time highs about 3,100. But the risks rewards have to be measured properly. Better to buy on pullbacks rather than go at current levels of 22,000 odds. But yeah, the risk reward, if it were to pull back, will be more attractive. A little late in the game from a sector's perspective overall. But select stocks like Cochin Shipyard might try to play catch up with Mazagon and Garden Reach. So that way, be selective about your picks. You can probably look at something like BEML, which is in capital goods as well as in defense space. So maybe that might make a little more sense than Cochin Shipyard.
Jay, after the big run that you've seen on gold, you have an equally bullish segment of the market and an equally bearish as well. Some say that gold will not do anything for, say, the next 12 to 24 months from here after the run. It's moved like a mid-cap stock. It's up 50%, I think, in 18 months. Which camp are you in? My home minister tells me that gold is going to be blockbuster. And I've got a younger one as well, who's even more bullish because she's going to be getting all of it in the next 20 years. What's your view on gold from here on? $3,400, pull back to 3,000 for a day or for a few hours and rocket yet again. What's your take?
Yeah, if you have to look at every asset class dispassionately, Nigel, and if you look at gold, it's right now from 3,500 record levels, it's clocking lower lows. But and things can change if it were to close about 34.40 on the London fix. But as long as the precious metal stays below 34.40, it still continues to clock lower lows. So I'm anticipating, I've been still anticipating some correction to come through. For a bullish reset, a sharp downside somewhere close to 2,600 mark. That's been my case. But I will revise the case bullishly if gold were to close about 34.40 on the London fix. Right now it can go either way with a slight edge, very slight edge for the bearish case.
All right, Jay,
Jay, just want to ask you just one more thing before Surbhi comes to you. Gold or silver, what is better? What's looking better on the charts?
Yes, silver. I've been slightly bullish on silver for the short term because the gold-silver ratio needs to, we are somewhere closer to the silver's favor, silver precious metal, silver's favor. So that is actually what is happening. One more record high for silver. 52-week high, not record high. 52-week high for silver, about $35 on the international silver. And post that, I think gold and silver will start to decline together. But in the very short term outperformance for silver.
Short-term outperformance, perhaps in precious metals, but medium-term equities it is. That's what you're optimistic on, including India. So that big headline remains. Got it. Jay, thanks very much for joining in. Good conversation as always. Well, we're down to the last 1 or 2 minutes of trade now. So let's wrap this up. Down day, almost 200 points lower on the Nifty, gentle downward drift. But like Jay's been saying, that this consolidation has been gentle. We haven't had very sharp, sort of jagged days, big gap downs, etc., which is the point that Nigel was also making, that it's not like the VIX has shot up in a big way. Let's actually pull up the India VIX. So it's been a consolidation, but in a more sort of measured manner. That's the VIX. VIX is actually down about 3% on a day like today. Okay, let's talk about then what led it down. On the lower side of the Nifty, Adani Ports, Adani Enterprises, Coal India, Bajaj Finserv, Power Grid, these are the names, Bajaj Finance, SBI Life. Actually, overall financials have been weak. Financials, banks and non-banks, they have led things lower today. HDFC Life, Axis Bank, Kotak Mahindra Bank, you can go on. Plenty of names on the downside over there. IndusInd Bank as well, down about 1.7%. More names, NTPC weak. You've got weakness on Tata Motors, L&T, some of the metal names like Tata Steel, another down day for them. And even the big boys today, SBI, Lever, Reliance, ITC, none of them really fired. So it was an all fall down kind of a day to sum it up. Actually, on the upside, very few names that can be counted. M&M and Bajaj Auto managed gains, very small gains, 0.5% or so. And then there was Shriram Finance and Grasim. That's about it. Otherwise, Nigel, 190. And it's all down. You can't blame 2 or 3 batsmen. Basically, the overall team decided to take it easy today.
Getting into cricket mode, big evening coming up. But let's tell you